Hello, everybody. Happy holidays. I'm beyond honored and impressed that two of my favorites in the space, the gods of the space, the two kings of Bitcoin, both happen to be from Canada, are here with me today during this Boxing Day, as people say in the UK. We have a lot of Europeans in the audience too, but I can promise you that this will be a mind bender. Every session with these guys always is. So grab a coffee, or as Elon Musk does, a BlackBerry White Claw, and buckle in. It's going to be a fun ride. So Jeff Booth, if you, of course, every will know him, and they'll know Greg Foss, but Jeff Booth is a visionary leader. He's been on the forefront of all sorts of technologies. He understands how the world works, and he's done it all. And he's been published everywhere by Forbes, Time, etc. But the big masterpiece of Jeff is his book, The Price of Tomorrow. It is the book of the century, beyond all shadow of a doubt. And Greg Foss, he's been over 3 decades in high-yield credit trading and analysis as a PM and trader, hardcore Bitcoin enthusiast, Cornell grad, and he knows macro and bond markets cold. And Greg embraces Bitcoin as a hedge against the debt spiral. We're going to talk about all of that today. So how are you guys doing so far?
Awesome. Great to be here, James. Thanks for having us.
Well,
yeah.
I know the world...
Huge pleasure. Huge pleasure. Always happy to be here with Jeff. You know what? I'm looking forward to learning even more. So let's get at it.
Okay, good. Well, I'm going to kick it off a little bit differently. I do have a structure, but I'm going to start this with a bang, okay? And a common question I get, and this is from a dear community member, said, when you're talking to these guys, can you ask this question? So with debt, bonds, and tapering, etc., and the impact on Bitcoin price, as a mid-40-year-old husband and father of a few kids with a mortgage and looming college tuition, it feels like Bitcoin is my only hope to ever retire. Is this a crazy notion? And should I go all in? So I'm going to just throw that one at you first. Break the ice.
Go, Jeff.
Okay. 40-year-old all in. I would never advise it to go all into anything based on. That being said, I totally in agreement on, I can't see a better asymmetric bet in my lifetime, and in an asymmetric bet that also helps humanity walk across the other side. So it would be a big bet to me. Here's a way to look at all investing, and actually a whole bunch of people that are in altcoins as well, as people are trying to escape the existing system and trying to make enough money to escape the existing system so that they can retire or live their life comfortably. And what they're doing is actually, in a lot of cases, creating more risk on that because it creates a big lottery. Some people are escaping, but then they're converting that money back into fiat currency and back into that mix. All kind of to be able to escape. What does an entrepreneur do? An entrepreneur, to this question, James, actually goes all in. So all of your wealth potential is actually in one thing at the expense of everything else. And so what that means is you're betting on yourself, and if you're right, you win massively. And if you're wrong, you lose massively. That's what an entrepreneur does. As soon as they win, they diversify. So all in is a really great way to create wealth or destroy wealth. And diversification is a better way to protect wealth. So depending where you are in your life, where that person is in their life, would be dependent on what would that would look like. I think Bitcoin is an incredible bet, and one that is congruent with kind of my beliefs and where the world must go. That being said, if you asked me, am I all in on it? No. But if I measure my time, what I think about, I'm mostly in on it.
Yeah, that's great. And I believe as well, as an investor, it's very important to have high conviction. And you get high returns. It's like anybody doing a startup. You look at all the most successful people, they went all in, like 99.999% of every fiber of their being and every penny that they had to be successful. You guys know the list of Elon Musk's and the Jeff Bezos's and even the Bill Gates of the world. So great one. Anything to add on that, Greg? What would you recommend for this 40-year-old with a couple of kids and a mortgage and seeing no way out? How do they escape to financial freedom and retire?
Sure. You know that it was a great answer already by Jeff, and I was jotting down some notes, and just as he was writing, as he was saying about this asymmetric opportunity, I need to reiterate. I believe the same thing. I believe this to be the best asymmetric investment opportunity I have ever seen in my 30 plus years of managing risk. That being said, I am not 100% certain that the outcome is the way I see it. The reason? You can never be 100% certain in something as new as this in a world of technology and systems that can change quickly. When I say systems, I mean political systems. But when you do probability analysis, and I need to stress this to your listeners, you do not have to be 100% in order to reap the rewards of this opportunity. And that's what's so exciting about this. Yeah. Now, I'll just mention to your listener, and he might not realize it, but if he has a mortgage, then he's not 100% in, right? It implies he has a house. He has some equity invested in that house. I am not advocating that he takes out, a mortgage against his house that's 100% borrowed against the equity. But that being said, this is the best opportunity I have seen. So you don't have to be 100% weighted in that trade. The one thing I am 100% certain of is that fiat currencies will continue to debase. That is pure mathematics. You need to hedge your portfolio against that certainty. And it is my belief that Bitcoin is the best horse in the race to do that. But like anything, when you go to the horse track, or I'm using the ponies as an example, but you can bet on a trifecta, right? There's other things as well. I think Bitcoin should be your highest conviction weighting. It is not 100% of my portfolio purely because I have real estate. For example, I have investments in real estate. I still do stocks. I do have zero bonds, and that's what I need to stress to your viewers as well. Yep. If you own any bonds, I believe that you are misallocating your capital into that silo, and therefore you can take and remove capital from that investment bucket and move it towards Bitcoin. Sometimes there's a word called diversification, right, James?
With the capital die.
The problem is we often diversify.
Yeah.
Oh, we have to own bonds. No, you don't. Okay. Bonds are a diversification. You are absolutely certain to lose money on a real basis when you invest in bonds. And if you own high yield bonds, you'll probably likely lose money on a nominal basis as well after defaults are subtracted over the next cycle. So let's not overthink this. Yeah. Yes, it's a high conviction trade. Do you need to be 100%? There are people out there that are. But as Jeff and I have done this for many years in our careers, it's very hard to be with 3 kids, which I have, 100% allocated to one asset class because you have other things like a house that add value in your career and in your lifestyle. So the beautiful thing, though, please,
but it's so
you
funny.
do not need to be.
Yeah, people kind of
need to be 100%.
I think people kind of get cryptocurrencies and they get equities, but the bond market confused them. And I had a good friend of mine had a 7-digit professionally managed Vanguard portfolio. Okay. Literally up until I ripped it apart back in August of this year. It was 60-40.
Yeah.
60-40 equities.
Professionally managed.
Yeah. No, I know. And that's because some of these investment guidelines are set historically. They're set through the rear view mirror. They're not set looking forward. And the beautiful thing about a bond, James, and this is what your listeners know, it is a fixed contract. There is no messing with the mathematics. It's not like, oh, if things start going better, we're going to increase the rate on this coupon like they do with a dividend on a stock. There is no subjectivity to it. Yeah. It's 100% mathematics. And with a 1.5% 10-year US Treasury, I can guarantee you, without a shadow of a doubt, that the return on the 10-year Treasury over the next 10 years, barring a default, which is a low probability event, but not a zero probability event, barring a default, your total return will be 1.5% annualized. People will say, oh, I can trade the market, I can anticipate interest. You cannot. If that was the truth, then these professional money managers would be outperforming the bond market year after year, and they aren't.
Yeah.
Bonds are a fixed contract. 1.5% is what you will get over the next 10 years. Even if you go in and out and in and out and in and out, not minus trading fees and administration fees, 1.5%, James. It's not difficult.
Exactly. Well, I'm glad you mentioned a whole bunch of stuff there, both of you. And I'm glad you mentioned the term math, because let's switch gears. I don't know if you can see this, but it's the US debt clock and how it's spinning out of control. And I've been watching this since, at least 20 years. And sometimes I go away for it for about 12 weeks and then I come back and I can't believe how much it's actually gone up. So this takes me to the topic of, number one, we look at the US debt clock, and the US is very transparent in terms of a lot of the money printing and national debt and everything else. Other places are not so transparent. But I argue the point sometimes that the US is in a bad situation, but there are other places in the world that are even worse, including Canada. In fact, the national debt as a percentage of GDP is the same as the US. But if you go to the Bank of England or ECB, or you look at Japan, or even some of the secret money printing happening in China, it's actually worse. And that's why the dollar index is staying so strong, because it's being benchmarked against a bunch of other worse fiat currencies. Would you guys agree to that statement?
I'll grab this first because I know Jeff will make my answer look quite nursery schoolish. But here's what I want to say. First of all fiat currencies are melting ice cubes. Okay, that's math. The rate of decay is relative. So everything tends to trade against the US dollar. Okay, the only true cross currency there is for Canada is the US dollar. We don't trade Canadian dollars to pounds. We have to go through the US dollar first. I'm not sure if you realize that. So Canada has one cross rate, FX cross rate, that's with the US dollar. It doesn't matter. The US dollar at times will strengthen or weaken, but over time, it's 100% certain it will also decay. I said that's mathematics. The relative level of decay is a question of trade flows. It's a question of debt metrics. The key thing that you need to understand, and you said the US debt clock, I'm pretty sure that you're probably showing the top left-hand corner of it. I can't see it on my screen, but that shows like 29 trillion.
Correct.
Go down to the bottom right-hand side of it, James, and show the total unfunded. This is what blows me away. This is Medicare and Medicaid.
Exactly.
This is another $160 trillion. So in total, it's close to $200 trillion of US funded and unfunded debt. Quick question for your audience. How many Bitcoin is that? And you're right. The answer is it's 4 billion Bitcoin. If you want to put the size of the total funded and unfunded debt in context in the United States, it's 4 billion Bitcoin when Bitcoin's at 50,000 US a Bitcoin. Holy moly. It's 100% certain that we will continue to debase because we need to print money to solve the debt spiral.
Exactly.
Over to you, Jeff.
Yeah, and first, I think back to the previous question that Greg answered. I answered. First, my conviction in Bitcoin has only grown over time, and I'm always trying to disprove that hypothesis. So it's really important. So I'm constantly open to something that would disprove that hypothesis, and seeing none, and it getting stronger and stronger, my conviction grows and my allocation grows over time. But people need to do their own work on why that might be true. But that is the work that I for me. With this specific question, every other market, if US is the base currency, and the base currency because of essentially tying energy, oil, to US dollar, and then everybody to be able to transact on a system had to price energy and oil, and to do that, the war machine had to kind of create this with Saudi Arabia first, and block access for the world that chose not to price their energy in US dollars. They got excluded from a system, and that allowed the US dollar to gain a network effect around the world and be used as a functional currency. Now you're in a state where that, by the way, energy will be priced in Bitcoin. I am almost certain, and that is moving right now. Is very early, but energy will be priced in Bitcoin. Because what if you think about what then ends up happening for a long time to drive China's trade and grow them into a great nation or to really fast growth? You have this leverage happening. They're the seller of the world. U.S. is the buyer of the world. That trade imbalance to happen, U.S. has to run constant deficits, and they have to pay their people more so they're buyers. And to do that, they have to have low interest rates. And so for a long time, you could look at China as giving the U.S. vendor financing. So China bought U.S. treasuries, kept interest rates low. Why? If they didn't, interest rates would have exploded. U.S. fails, China fails. Then in about 2016, China stopped buying U.S. treasuries. What did they buy instead? And why might that have happened? Because if you're China, you realize, wait, like Greg says, this is only math. They cannot pay us back.
Yep.
They're going to pay us back in cheaper dollars tomorrow. They're going to print their way out of this. And actually, if you even deeper dive on that, essentially what the pricing of oil in US dollars allowed the US to do for a long time is they got free energy while the rest of the world paid for energy. If that's because they could print their energy. But so China goes and invests in rare earth mines and rare earth and things the world needs to start to create, and they take that money and they put that elsewhere, and that starts to create global conflict around there. What does U.S. have to do? They have to start funding the short term. What Greg talks about, they have to start printing the money themselves to keep interest rates down. Because if interest rates go up, the whole world collapses, and the whole world.
Exactly.
Now, every other currency is built on top of that, and these flows, no matter where you are in the world. So now, if the U.S. tightens, you are going to see cascading defaults in all of these other countries. U.S. last, but cascading real defaults, and U.S. dollar would get stronger, but that's stronger because all of these funds are denominated in these loans are denominated in US dollars. It means these countries will fail really fast because they can't pay them back.
Yep.
So you will have defaults, and that's why the US dollar gets stronger in that case, because as they tighten, everybody races for a currency, which forces that to happen faster and faster and faster. And ultimately, that's why Bitcoin is a hedge on both sides. It's a hedge against US is going to print. It has to print a bunch of money, because if they don't, Europe will fail too. All of Europe. And so, so the US isn't just bailing out themselves anymore. They're bailing out the entire currency regime of the world. They have to keep, and they have to keep going. And if they don't, you're going to have cascading defaults, which also benefits Bitcoin because it's a risk protection there.
In fact, what you're talking about is very hard for the audience to wrap their heads around, because you've seen it happen all around the world. What I have done is put together kind of a slide that kind of tries to demystify part of that, and I call it the debt spiral tipping point, with real actual numbers. And remember, everybody out there, when you look at these numbers, when you look at other places like the United Kingdom versus Europe versus Japan, it's even worse. So what I have here is you're probably familiar with the debt spiral tipping point. I know, Greg, you're going to like this one. It's typically from the World Bank. They say it's about 77%. That's the level at which your debt to GDP ratio, once it goes above that, that's it. Game over. You can't get back under that level. So US national debt, call it 29 trillion. US GDP, 23 trillion. The federal debt to GDP ratio is 127%, which is exactly the same as Canada right now, coincidentally. And the US interest on debt is 421 billion a year. The effective interest rate is 1.43%. So we're going to talk about before we talk about the tapering and the bond market and everything else and the debt collapse potential scenario, the impact of a Fed rate hike, if you increase the interest rates by 25 basis points, that's going to eat up 2% of GDP. You increase it by 50 basis points, it's 2.5% of GDP. 75 basis points, 3%, et cetera, et cetera. Do you guys believe in this tipping point? And are we well beyond it? Like the numbers tell us, as you say, Greg, it's math.
Yeah, well, so you're only using government, federal debt. I'm
Yep.
going to add something about Canada that's interesting. Start adding the provincial debt on top of it, because do you think any of the provinces will survive if Canada doesn't survive, or vice versa? If Ontario defaults on its massive debt load, do you think Canada is going to survive? It won't. But here's how I even make it more simple, James. I take total global debt, so I don't isolate it by country. I take total global debt to total global GDP is over 4 times. Okay, 400%. That includes corporate debt, provincial, state, muni, structured debt, bank debt, etc. But here's the point: since interest expense is tax deductible, yes, you need to look at your total debt load versus your tax base, which is global GDP, right? So a multiple of 4. Now let's take a interest coupon on that debt, and we're going to estimate that to be globally around 3%. And that's a conservative number, but that's 3%. If your numerator is 4 times your denominator and the coupon is your organic growth of the debt, your your numerator is growing at 12%, isn't it? 4 times 3% is 12%.
Yep.
Is global GDP going to grow at 12% to keep pace? Just to keep pace with the coupon, the organic growth of the debt balloon? Absolutely not. And it gets even worse. And I can run through the numbers, but even on that metric, it is impossible for the world to outgrow the organic growth of its debt. And you can look at individual companies. So do I believe in 125% versus 77%? Of course I do. But it's still on a global basis. It's your mathematics as defined. You're not going to go country by country, because all fiat currencies will fail. US will be the last one. But Canada, unfortunately, is most likely to be the first G7 nation to fail. Why? It's the smallest economy. It's less important than the state of California. Our country is 4,000 kilometers long and 100 kilometers wide. 90% of the Canadian population lives within 100 kilometers of the US border. Okay, we are not diversified like the United States. We don't have horizontal and vertical integration. We are very susceptible to certain shocks, and the US is our largest trading partner. Put this all together and question, how is it possible that the rating agencies still have Canada rated AAA when the United States is rated AA+? That's true. S&P has Canada as a AAA rating, even though its debt metrics are worse. They don't even include the provincial debt, and we have a less diversified economy. And we have a prime minister who is out there saying stuff like, the budget will balance itself. These are dangerous things. And what happens when a credit rating agency finally decides that it's time to downgrade? It starts building on itself, doesn't it? And the confidence leaks out more quickly because they say, oh, there should be something wrong, or there could be something wrong. The reality is Canada right now is trading in the credit default swap market. And I don't want to get too granular for your listeners, but there's a market for default insurance that Canada is trading much closer to a single A rated credit than to its AAA credit rating. And I've seen this before. We've all seen it before when they pretended that subprime mortgage structured debt was AAA rated. And people were questioning it, and the credit default swap market was calling out the farce far before the rating agencies got in gear. Look to the credit default swap market. It is concerning. And this is why I need to ring the bell, because too many politicians have no clue what I'm talking about. And we're playing with our children's futures here. This is about a country. Go ahead.
In fairness to Trudeau, though, he does say he doesn't understand anything about debt and finance.
I guess you could say that's fair, but if he's your CEO, I mean, that's dangerous, right? I mean, here's a guy that, if he's a drama teacher, he should stick to teaching drama then. I mean, you don't want someone that says stuff like he doesn't care about monetary policy. So I'm going to let Jeff say, add my thing, but just going back on Jeff's last comment about energy being priced in Bitcoin, which I believe will be absolute certainty as well. Not absolute, but highly likely. Why is that? Look, I'm an engineer, James. The law of conservation of energy is the principle, the foundational principle. Law of conservation of energy. Does it make sense that digital energy, which is Bitcoin, is used to price natural resource energy? Of course it does from an engineering perspective. It's the law of conservation of energy. So I just wanted to add that. Focusing though on these debt metrics, it has been over for a long time. Okay. The problem is no one has ever called it out like we are now because of the shenanigans taking place with the COVID response and everything and the like. It just accelerates the debt balloon, the natural spiral that we are experiencing.
That's the key word. Yeah. Jeff, over to you.
Yeah, and this is what I talked about in the book. So what I had to explore is if technology was deflationary as I expected, and it was exponentially deflationary, because that work wanted to free our time, it wanted to reduce prices, and that was in an exponential function, then something on the other end of the spectrum must be stopping that. And so when you zoomed out, and that's where when you looked at the $185 trillion globally to support $46 trillion of growth, you realized, wow, that's what's stopping prices from coming down everywhere. It's still not enough to offset in technology specifically. Technology is still overcoming it, but in some goods that haven't been moved into technology or as much into technology yet, or assets, it's pushing prices up against that. Mm. And so you have these two forces fighting against each other. But more importantly, if you realize most of the technology is in front of us, not behind us, and that's an exponential function, it has to move forward. You could predict all of the printing has to be in front of us too, to be able to stop that. And that has to be an exponential function. So what you're seeing, COVID or anything, is just out of that system. But what people are stuck in, and I liken it to this: ever tried to win the shell game? Right? And the peas are moving around and they're stuck in a narrow part of the market, trying to understand the narrow part of the market. Well, the entire market is, and they're measuring the system from the system. And unless you abstract to a level to see what's going on in every market, all debt markets, all technology market, everything, and abstract to that level, you are sitting in the system trying to measure the system. Whether you're a government official, whether you're somebody trying to make money in your own personal portfolio, you're sitting inside this blind to everything that's going on. Yeah. Well, it's being manipulated. So you're measuring everything by that manipulation and you can't see it.
It's interesting. In my life, always to try and understand things, I imagine myself as an alien looking down on Earth and then deciding in a purely objective manner from spaceship, does this really make sense? And that's how I get to my resolution.
Funny that you said that. It forces you to ask, look in first principles. Yeah. Ask why would, okay, should we have an entire economic order of the world that relies on somebody pressing a button to destroy our labor, essentially, because that's what you're doing? Should we have theft in our monetary layer? 2% inflation, 5% inflation, 10% inflation. It's just a theft. It's a hidden tax that nobody votes for. But people believe that you can't live in civilization with that. You can't have a productive society without theft. But they believe it. And if you dropped yourself from space, you'd kind of say, okay, who deserves to have that power over all humans? Yeah. And why does it exist in the first place?
Well, I think that's also another tipping point. And I did a graphic at a graphics department, work on a graphic for something is, we became accustomed to 2% or 3% inflation, that being taken out of our back pocket every year. That was the normal. It was fine. It was acceptable. Once it hits 15%, or people see it when they walk into a store or they try to buy a house, then the alarm bells start going off, as you say, Greg. The 15% is the wake-up call. The question is, can this go back down? Will it be transitory, or is it just perpetual acceleration, exponential, whatever word?
Can I answer that? Because it's really critical in the whole thing, whole giant game that we're playing. Forget how much money you're making. It will go back down because you're going to have a deflationary spiral at some point, unless all inflation has to increase printing more and more and more. But we're measuring the system from that. So if you remove stimulus for any length of time, you're going to see a wake-up call in the world, and everything would fail. It would cascade. It would keep failing. It would keep unwinding. And when Griggs talks about a zero, you can't say it's a zero probability event of that happening. That's what he's talking about. Because the entire system that we live in is made on top of that manipulation and credit. And the credit-based system must grow forever or face a day of reckoning. So it has to grow exponentially. So if you see slowing down, you are going to tip into disinflation and then deflation, which means you won't see slowing down for very long. Governments are going to print more and more and more and more. What does that mean? What does that mean? You're transferring more power to government and removing your individual rights and freedoms as you do so, because you think government can take care of you, and you have to transfer more. And as they take more and more of that free market away, they actually make it happen faster. Because what would an entrepreneur do in that case when prices are rising? And everybody, all of us, demand lower prices and demand more for less. An entrepreneur would solve that problem by in taking technology and serving you better, which cascades the loop on the other side, which makes printing money. So you have to ask yourself on these paths, it's a way bigger deal than people realize. You have to ask yourself on these paths, who should be on top of controlling everything? And if you can't, put a picture on the face that you want to put a name to that picture and say, this is the person I want in control of everything forever, and subject, hopefully they won't change their mind.
So we have some leaders. We have some leaders forever now too, like President Xi and Putin, etc. But that's a separate issue. So
that's what it looks like.
Yeah, let's talk about like the bond market, and I know everybody's interested in like, where's Bitcoin going? When are you going to talk about Bitcoin pricing? That's coming, everybody. Please be patient. But we have to look at, again, the view of the alien on Earth to really understand where Bitcoin's going first. So we'll talk about the taper. This has everybody rattled. We talked about the interest rates, the fact that if interest rates are jacked, the debt cost just eats into GDP. We're beyond the tipping point. So I hope everybody got that piece. Second piece is the so-called taper, the bond buy slowdown. And the Fed recently stated they will start reducing the amount of bonds that they're buying, which is about 15 billion a month, 10 billion in treasuries, 5 billion in mortgage-backed securities. That's going to happen every month. Hopefully they'll be done by doubling the acceleration by March. The question is, do you think they will stop that taper entirely by March? And if they do that, who's going to buy the bonds? Will this crash the bond market or cause a debt crisis? And number two, at what point will bond investors throw in the towel and say, we can't do this anymore? So very loaded question there, but I'm interested in your perspectives.
I think that it's a great question, and you just never know. Having traded debt that's highly prone to default, everything seems to go swimmingly until it stops. I mean, risk happens fast. That's a horrible expression, but it's true. Like a loss of confidence is the crisis that kills all markets, whether it's the confidence that a particular individual borrower has the free cash flow or the means to refinance its debt. Once that confidence is gone, it builds on itself, and it's a contagion that leaks backwards from individual corporations through the financial system and eventually up to the issuer of government debt itself.
Gradually, then suddenly.
Gradually, then suddenly. So the question, you asked a really good question. Let's focus on the taper. And I think, I'm not going to speak for Jeff, but I've heard him answer this question similar to my belief. The US dollar, when the US dollar strengthens, Jeff mentioned this at the outset of our conversation, that is very harmful to global economies, emerging market economies. And how does the US dollar strengthen? Well, short-term interest rates become more attractive or higher so that people want to put their money in the short end of the US Treasury curve. That causes the price of the dollar to rise. And de facto, it causes emerging market currencies to weaken. that increase in dollar price will cause sell-offs in the risk markets in emerging markets. And we've seen it in 10 years ago when they had the first taper tantrum. It will bleed back into the S&P, and once it bleeds into the S&P, the Fed will get cold feet and it will stop tapering. So it's my belief that long-term tapering is almost impossible. I think Jeff will back me up on that, but before I give him a chance, the most certain thing is we know the US dollar is where people run to in fiat terms when the world starts to unravel. We need an insurance policy against that. That's called Bitcoin. We know that. We've talked about it. Whether it's an inflationary environment or a deflationary environment over the cycles to come, over the next cycle to come, it's irrelevant. The US dollar and all fiat currencies will debase with 100% certainty, regardless of whether we are in an inflating environment or a deflationary environment. Okay? It's the mathematics of the debt balloon that ensure that you need to print more dollars to pay or to solve the equation that there's not enough tax revenue to pay the expansion of the debt. Therefore, we have to print money to essentially pay for the expansion of the debt. And your question is, what happens if it stops? I don't know, because I've never experienced the G7 country where it does stop, but I'll tell you, I've experienced plenty of corporate capital structures where it does stop. And it stops quickly, and there's nothing you can do about it, because once that confidence is gone, it doesn't come back, and there's what's called a restructuring or an orderly redistribution of the risk that has been incurred. I don't want this to happen to the United States of America, but it is happening today to Turkey. It's happened 4 times in my life to Argentina. And I don't want it to happen to Canada. I've mentioned that. However, it's far more likely it happens to Canada than it happens to the USA. But the USA doesn't operate in a vacuum. If Canada's the USA's largest or second largest trading partner, China being first, Canada being second, depending on what metrics you look at, don't you think there's a knock-on effect to the USA that their largest or second largest trading partner is now in restructuring? Don't you think some people say, whoa, that doesn't make our debt look that good? And what happens is in any debt spiral, James, the debt doesn't get repaid. It has to roll over, which means every auction where they go to auction the new funding, if people don't show up at that auction and bid to cover ratios, which right now are in around the two multiple, meaning there's twice as much volume demanded per debt. What if that ticks down to 1.5 times and then 1.25 times? People that own the debt are going to be looking and saying, damn, not only do I not want to show up at the auction, I better sell the debt that I own right now, because if there is going to be a restructuring, I want to get out of it. And that's what happens. It's a cascading or a domino effect. And by the way, it does happen quickly. I don't want it to happen. And this is why we need to institute a parallel network. And Jeff and I talk about this. You need to have your safety net in place before this crisis in confidence occurs. When it happens, it is ugly, and there's no putting your finger in the dike, okay? It's over, and you better have a secondary network in place to solve this inevitability. So over to Jeff.
And before we go,
the only thing I can say is you just never know when, and you have to have that insurance in place.
And before we go to Jeff, you and I both saw during the financial crisis, nobody was turning up to buy the debt except the governments.
So
they still could, right? Because they could. But at some point, and this is what I think Bitcoin is so interesting. Bitcoin, James, is actually a put on the Fed put. The Fed put is the rescue mechanism. But what if that rescue mechanism doesn't work anymore? You need to have a put on the rescue mechanism, and that put is called Bitcoin.
Or if one senator says no.
Yeah, and,
you know what that means.
And Greg, what you just said, if you just look at the fundamentals on what's happening, That will happen for sure. This is
Oh,
going to
yes.
happen. It's just when. So if take back to 2008, what you guys are talking about, the auctions, what they look like. I ran a fairly sizable business with global trade at that time. And in other words, I had letters of credit with counterparties all over the world. And those letters of credit were fully funded. Our bank we had cash in the bank, tons of cash in the bank, and all over the globe, letters of credit was corresponding banks. Nobody would take our letter of credit. Mm. For 3 days, trade stopped globally. No other bank globally would take our money. And it cascaded and cascaded. And so what you had is the Fed came in and didn't just bail out the US, bailed out global markets, because if that didn't happen, you would have. So think about what would the cascading, that unwind, if all of our life is built on top of that credit, hospitals, banks, everything else, it keeps on failing. It's not just Lehman, it's not just Goldman Sachs, it's cascading everything. It just keeps on cascading down. And that's the why those counterparty banks didn't take our money, because they couldn't trust our bank. And what was the money in the first place? Where was the money? Who had the money? And so the US raced in with massive liquidity to bail out, to grease the wheels of the financial system. Now, you could argue that was a good thing or a bad thing. It kicked the can down the road, and it made this whole thing way bigger. But it also corrupted capitalism, because what it said is, if you take a risk that's great enough to fail the system, then that we will not let the system fail no matter what.
Too big to fail.
Yep. Too big to fail. And so it moved the risk normally from the market to currencies themselves and to the Fed itself. It moved the risk up a level to and it effectively said, no matter what, we'll socialize losses at the expense of the winners. Will get paid in either event, and we'll socialize losses and pick the pocket of a whole bunch of our population to do so. When you do that to capitalism, too big to fail, or you distort the rules of capitalism. And what that means is, anybody with tons of wealth knows they have to blink.
Yep.
And they race in, and now you don't have capitalism, you have crony capitalism, and you have a whole bunch of people realizing that the rules of the game are rigged, and they're going to pick the pocket of the middle class and poor forever to be able to do this. And you transfer more and more wealth, more and more power to that apparatus. What ends up happening over time, because a whole bunch of the population is losing out from that trade, and the rich are getting richer and richer and richer from that trade, that population rises up and they demand other government officials change the rules, not knowing that the same thing would happen no matter what party you voted for, because most of the revenue comes from that hidden taxation, which is a theft, and nobody's willing to turn off that hidden taxation, which is a theft, because the whole system would fail. So they think a person can solve it, and no person can solve it. It's a systematic problem, and that causes people to turn against each other in a system, and give more power to the system to be able to solve it, which it cannot. And so when we're talking about these systems, there is no fix from the system. And you have to realize that all of the people kind of at the top of the system that would want to keep it going, of course, because the closer you are to that system, the more you benefit, and it's a one-way trade. And so interest rates are going down, not up. And I will guarantee you, the long year or the 10-year, you're going to have yield curve control across the entire curve until it breaks, and it will break. It's just of when. What's that? As you know, I've said before, which snowflake causes the avalanche? If you just go back to 2008 and you say, mathematics, they had to.
Yep.
Because the whole system, but now everybody knows they have to, and that means we're measuring a system from all of this distortion, And when you have misinformation in money, you have misinformation everywhere. And so people are looking through that misinformation, trying to make sense of what's going on in the world. And it's because of that misinformation.
Exactly. Well, this has been incredible. We have a long way to go. So I always want to be respectful on time. So I want to start jumping into the funner part of this. And I know you guys will, I know this is what the audience loves. And Greg, you said this before, and we go back to bonds and replacing the bond allocation. I call this the how Greg gets to $2 million per Bitcoin. I've created models that get us to, I kind of tried to find a way to back into Breedlove's $12.5 million Bitcoin in 2031. And it's actually really easy to do. And we'll get to that in a minute. But let's talk about the 900 trillion in assets, 5% allocation, 45 trillion valuation. That's $2.142 million of Bitcoin. What I have, my math is a little bit different. So there's a slide showing here is if you add up the total asset values in trillions of dollars, I get to about 821.5, not the 900. So I'm a little shy of yours, but that includes residential real estate, bond market, right, global debt 360. You said global debt's about 400. That's 40 of our difference right there. Equity markets 119 trillion, land 38 trillion, commercial real estate 33 trillion, gold 12, silver 1.3, fine art 1. So that's 821. Now, if Bitcoin allocation is 1%, that's a $391,000 Bitcoin. A 5%, which is yours, is a $1.955 million Bitcoin. And a 10% is a 3.9 million Bitcoin. What do you guys think of these crazy numbers? And then we can talk about really crazy numbers that are actually very credible when you back into it. But sometimes people don't understand. They still value things in terms of dollars. And that's a big mistake going forward, because $4 million 10 years from now is only going to be worth maybe $1 million in real purchasing power. So over to you guys.
Well, the key thing, and this is great math. Okay, look, let's not argue. What's $80 trillion between friends? So you're at 100, you're at 821, and I'm at 900.
Yeah.
Here's the key. That's in today's dollars. Very simply, people, project forward 10 years, and those numbers are going to be way, way bigger. So Bitcoin, in my mind, if it captures of the total addressable market 5% of my 900 trillion or 5% of your 821 trillion, it's a rounding error. That's $40 trillion divided by your 21 million total supply of Bitcoin. Therein lies the $2-ish million per Bitcoin in today's dollars. That's key. It's in today's dollars. So if that's what Bitcoin could be worth, and it's currently trading at $50,000, what is the market telling you the probability of us being right is, James? And the answer is about 2.5%, right? Because 2.5% times 2 trillion is $50,000. The other 97.5% times 0 is 0. You add the two together, you get an expected value. We talked about this.
Yep.
The cool thing here is do a probability analysis on this. Like I said, I'm not 100% certain I'm right, but am I more than 2.5% certain? James, I can't tell you my exact certainty, but it's likely over 50%, which means Bitcoin should be trading, in Foss's mind, at over $1 million today. And it's not. So I don't argue about it. I just say, thank you for the cheap Bitcoin. I will continue to allocate it to my portfolio. And you're going to say, okay, Foss, when did you get involved in Bitcoin? And I'm going to tell you in 2016. And you're going to say, what was the price? And I'm going to tell you it was under $1,000 a Bitcoin. And did my model change? No. What changed was my likelihood of it attaining my price target. And as that increases due to things, the probability increasing, due to things like our COVID response, due to things like adoption, due to things like El Salvador, due to things like the amount of intellectual capability coming into our market, making our market stronger and our community stronger, Bitcoin is actually a better risk-adjusted trade today at $50,000 per Bitcoin than it was when I got involved in Bitcoin in 2016 at under $1,000 a Bitcoin.
So you're telling people they're not too late. They haven't missed the train.
I'm not only telling them they're not too late, I'm telling them that my confidence of my asymmetric trade opportunity has increased. One of the things was COVID wasn't in our lexicon in 2016, nor was our response, nor was things like budgets will balance themselves, where I realized that we are captive to buffoonery. Okay, I don't want to be captive to a buffoon. And therefore, I need to increase my insurance, and so does everyone else out in the world need to do that. And that's why the price is ticked up to a price of $50,000, which in my opinion is still silly cheap compared to the opportunity.
This is kind of funny. As you're talking, literally in the last 60 to 90 seconds, Bitcoin price went up by $200. That's the power you have, Greg.
I doubt that. I doubt that 100%. But there's correlation and causation, and correlation does not imply causation, right? So maybe Foss was speaking and he just happened to be on at the same time where someone just said, you know what, I got a nice Christmas gift. I'm going to buy some Bitcoin for my company or something.
Exactly.
And when I would say my probability when I would think about this network and what's happening, mine would be much higher than Greg's today. Like if he's 50%, I think he's higher than 50%, but I think it's because again, there is no solve from the existing system.
Correct.
So what you must ask yourself is what possible system could solve this? And that possible system that could solve it is getting stronger and stronger and stronger, and it's emergent in an emergent network. What would be the possible solutions, and what would that look like? And that's what you see in the network effect of Bitcoin, that's just taking it farther. So how we are so early in this. If you looked at even the last talk we did, James or Greg's talk, I looked at the comments and some of the, and you realize just about everybody is measuring a system through a system.
Yeah.
And they think it's about, okay, I can gain a whole bunch of wealth to get out of that system. They're not thinking about it as measured in Bitcoin terms. Prices of everything else are going to come down forever. The problem is they're measuring in fiat terms, thinking the prices are going up forever. But measured in Bitcoin, everything will come down forever. It will look like what we're talking about with technology is everything gets cheaper and cheaper. They're just measuring in the wrong unit. So if you wanted a representative of value, take your 821, because it won't end at 5%. It won't be a 5% allocation. It won't be a 10% allocation. If it gets to that, which it will get to that, it will change to be the new system. It'll be 100% allocation. Everything. So the world will look, so the best way to understand what's happening in this kind of bridge to the other side that's in real time right now and we're early, is the best way to look at that is, what is your purchase power today? What do you need to live today? And if you took the 821 trillion and you said, that's, and how much do I have and how much would feel good today? If nothing else moved, how much would I need? That's a representative today of what you need in Bitcoin.
Yep.
And James, here's a neat thing. Oh, sorry, Jeff. I just add this because you didn't even add the unfunded liabilities of any country. So how many people in the USA are counting on Medicare and Medicaid? I would say quite a few. Well, that's another $160 trillion that's off balance sheet. Okay, so we only took balance sheet. We didn't even take off balance sheet obligations. So we can easily double or even triple that number. Doesn't matter. It's got to go through 1 million of Bitcoin before it gets to 2 million, before it gets to Breedlove's price of 12.5 million per Bitcoin. It's only a process. And as Jeff says, it becomes more and more likely because there is no other solution. Sorry, Jeff.
Yeah, no, it's so interesting. And it brings me, I always say for years now, all roads lead to Bitcoin. Now, I used to drive people crazy because I said it so often. But now when you look at that unfunded debt, you could also argue all roads would lead to UBI, Universal Basic Income. Like, how else is this going to be funded?
So that's
why pay taxes?
Yeah, so that
you can take it to an extent. Go ahead, Jeff. I'll just say this. Yes, how else is it going to be funded? And then you ask, well, why do we even try? Because it can't. It's impossible to fund it using existing tax levels. The margin, the taxes at current rates. There's something called the law of decreasing marginal returns. If you increase taxes, the tax rate, more of the economy goes underground into a cash into a cash economy, and taxes revenues actually go down. So we are actually at a point right now where you cannot increase tax rates anymore. And we know for certain that the tax revenues will never be able to keep pace with the organic expansion of the debt balloon. So at some point, do we just ring the bell and say the experiment's over? No, you can't, because you don't have the other network in place yet to be able to allow the world to continue to function. So that's what we need to build towards right now, is the parallel network. It's based on a Bitcoin standard.
If a politician is telling you that this can be solved with taxes, they are either blatantly deceiving you, or worse, incredibly naive in this system. There is, it was Greg said, this problem is way past taxes. It has to be stolen from you through greater inflation. You have to have negative real rates forever to be able to do this. And what that means, because that transfer of wealth to the people who have assets from the people who don't, is what the feeling of moving faster and faster on a treadmill, never being able to keep your head above water. What ends up happening to a whole bunch of people on the street not being able to pay for the bills, a whole bunch of society, what is a function of the same system, government creating that, will give government more power to be able to create UBI for those people, to be able to do, which will transfer more wealth and more power away from individuals to government to be able to solve the problem that government is creating in the first place. There is no solve from the system. If it's either, and that's actually why Bitcoin is so critical, and a lot of people that see that, you have to have a parallel system that can solve this, to bring sanity to this world, because otherwise it's a structural problem you cannot fix from this system.
To keep it honest, so let's play with a model here. This is I just want to pick your brains, and we'll plug in some numbers and we'll tweet it out later with your exact. So we have this thing that I built a while ago in preparation for a Breedle event for you, and I want to try it back in. We model this out live, but I have some very conservative numbers. One is the money printing acceleration rate. That's the rate at which money printing has to accelerate. And you know, Jeff, you know exponentiality better than anybody. So I'd like you to think about a conservative money printing acceleration rate. You, Greg, too. Money printing expansion rate, it's how much we're going to expand the money supply every year globally. Let's say somewhere between 10 and 40% is conservative, but that's going to be amplified by the acceleration rate. And then the lag between money printing and debasement, and how much factor over the next 24 to 36 months, is typically 60% of that amount. What I mean by that is, if you double the money supply, your debasement, your silent theft, will be 60% of that amount straddled over the next 3 years. So where do you guys see those numbers?
I unfortunately can't see the chart, but if you just go back into first principles, it has to be exponential on both sides of this.
Yeah.
And that exponential has to essentially hurt society at the same rate. And that hurting of society at the same rate, that social contract that we call our governance, why rules work, everything else, that has to be destroyed at that same rate as you're pushing more and more of that two forces into each other and transferring more power to relatively few away from the many. And what that typically does is gets reset through a hard cascading event. That reset is typically through revolution and war. And once you have enough power in your society by turning society against each other and changing the rules, then you have to create a bigger enemy outside your walls, outside your borders, to be able to keep the power. And so if you look at the long arc of history as currencies reset, and why do they reset? They reset through this exact same thing. A debt burden gets too big and governments try to print it away. And other governments, other trading nations are wondering what's going on, and they try to do the same thing. You get to a really horrific event for humanity. My hope in writing the book, my hope in doing these podcasts was, and while I respect all of the money part of this, my hope was to avoid that event And that's actually what I see in Bitcoin. People can get extraordinarily wealthy, but the more important thing is you're actually building the bridge for the rest of humanity to walk across, as you're doing that, so we can avoid that event. Because what ends up happening, you can see it probably in some of your comments on your posts, when people get married to a solution and they think it's or to, I'm so in pain. Do you think the person living on the street is capable of looking at Bitcoin right now? They live in a period of fear. They block their minds, close all doors, and they want to believe anything. And there's more of them than the few, and they'll rise. And politicians will use that power to consolidate power, and turn society against each other. And it's pretty predictable in history what happens. So, and sorry, I'll let Greg talk about the numbers. He can probably see them. But what I would say, the biggest thing is you will get rich in this, but that's the small part. The bigger part is you will actually help put a system that aligned incentives in the world that help transition society to the other side.
Right.
And I can't see the number. I can't see the chart either, James. And it doesn't matter though, because again, if I break it down into my total global debt to global GDP number of 4 times,
Yep.
you can plug anything into your model. It doesn't solve it. It is not mathematically solvable. And that's unfortunate, but it is a reality. And so, yeah, this is ugly. We know how this ends if you don't have a parallel system. And my hope is that not only do individuals from a certain country embrace Bitcoin, but so does the country itself. And I'm not kidding. I mean, I'm married to a French Canadian, beautiful wife, whose children we've decided not to teach French, but I joke that we should teach them Spanish, because the world should probably start learning Spanish, because we're going to have to start answering to El Salvador if we don't get our own house in order. Okay. And I want Canada to put some Bitcoin on its balance sheet. And don't you think the game theory, as that starts to play out again, my thought that it is a put on the Fed put, meaning every single nation in the world is counting on the Fed to bail them out. But what if that Fed put fails? Because everyone just says, we're not kicking the can anymore. We know how this ends. It just gets worse and worse and worse. Awesome. Then they need to own insurance. So therefore, it becomes a race of nation states to own Bitcoin. And the countries that put Bitcoin on their balance sheet, much like Michael Saylor put it on MicroStrategy's balance sheet, will be rewarded. They'll get citizens coming to their nations. They'll get balanced budgets because of the expanding wealth of their nation. They will have the most pure collateral on their balance sheet, which is Bitcoin, ever created. They will be able to borrow against that Bitcoin in both fiat terms, because there still will be a fiat currency. Most likely, in my opinion, it will be the US dollar, and all other countries around the world still use the US dollar as their checking account. The difference is, what is their savings account? And it's not US treasuries as the asset that's in their savings account. It's Bitcoin. And that is the beauty, and that is the parallel system that rescues this. And why does it rescue? Again, I built my entire career on mathematics. I'm an engineer, and this is what solves it. This is grade 11 mathematics. Don't overthink it. We're not talking about derivatives. We're not talking about third integrals. We're talking about linear progression of debt metrics. So you can punch whatever you want into your model. James, I'm going to tell you this. Yes, you're right. You are right, because the model is now absolutely certain to spiral lower. We can never achieve escape velocity from the debt spiral.
Yeah.
We cannot. It's impossible. So we need to create another system. And that system, in my opinion, and Jeff's opinion, as he eloquently says, is built upon Bitcoin. And there will be people that get fabulously wealthy. Jeff may be one of them and I may be one of them, but that's not what I want. I want my country and the children of the country of Canada to have a future that they deserve, rather than the selfish boomers like myself that are pulling forward wealth that should be accruing to our kids, but we're pulling it forward to, our weak generation. I'm embarrassed to be a boomer. I'm embarrassed for boomers who don't do math.
Well,
we need a solution.
This is incredible. So we will have 100,000 people watch this video within this 24-hour period during this holiday season. I can't describe how valuable it is. I'd like to switch now to the quick fire round because I know we're bumping up against some ice hockey.
Okay. No, I don't have to. I can stay as long as you want, and I think Jeff can too. I don't know. We'll go from there.
There's people in the UK that got some soccer Premier League stuff happening. So
okay.
But you know what, everybody? This is more important than a game that you can put on your DVR. So anyway, let's jump into the quick fire round. And these are things that I get hit with all the time. And I'd like to hear it directly from the proverbial horse's mouth as to how you explain. So I'll start with Greg. Greg, you use the term long vol and short credit all the time in reference to Bitcoin, a lot. Is there a non-jargon way that you can explain these terms to a 13-year-old real quick?
A 13-year-old, yes. Long volatility means it's an insurance contract. Everything else out there, think about what's happening when people are running away from risk. Volatility is increasing, means you want to be long it. You want to own it, because if something is increasing, it means the value is going up, and whether it's a monetary value like the VIX. So Bitcoin is long vol. When people are running away from risk, your long vol assets increase in price and your short vol assets decrease in price. So equities are short vol. Equities are risk off. Bitcoin is not risk on. It's something that you own as insurance that will increase in price when people are running away from risk. Is that fair? People don't want to own risk. Therefore, you need to own something. You want to own something that goes up in price when people are running away from risk. It's called insurance. Same principle.
And the other way I like to say is there's a correlation between alpha and beta. See the way that people could think about it, you could say.
I haven't yet, but that's interesting that you put it. Absolutely. Yeah. A correlation between alpha and beta. You want alpha. Beta is just the market. You want alpha. It outperforms.
Good. Jeff, this one's for you. Could you explain in simple terms for the audience how deflationary players may lead to a collapse of a debt-fueled inflationary economy?
Deflation makes the real value of the debt increase in price. In other words, you can't pay it back, and it resets. And that cascading reset, that's what Greg's talking about in risk, is the cascading reset of everything. And that reset, so in other words, you can't allow that. Governments won't allow that, because you cause a cascading reset. And you'd go to the bank and there'd be no bank there. The doors would be closed. We live on top of that society that is made up of that debt, and you can't allow the natural forces of technology and the free market to work. Otherwise, the entire thing resets because of that. One thing I just want to add on this, if anybody's listening, get off zero, like right now, but get off zero and get yourself a hard wallet and put and make sure it's off of an exchange. This is an important part of that insurance contract that Greg talks about. Put it in a hard wallet, like today. Get a hard wallet, make sure it's transferred off an exchange. Because if things get really ugly, and they will at some point, that'll be a way to protect yourself.
So it seems like there's potentially nowhere to hide when this debt bubble unwinds other than buying Bitcoin. Or do you guys have other tricks in your back pocket? Like, would you recommend people should pay off debt? I believe people should hold debt.
Yes, you should not pay off debt. Debt went in a debasing currency. If you borrow $100 today and it only costs you $60 in today's money to pay it back in 10 years, are you supposed to do that? Of course you're supposed to do that, right? You want to be a borrower right now. You don't want to be a lender. That's why I say you don't want to own bonds, which means you are a lender. You want to borrow money and pay $100 back in 10 years. It's really only $60. I like that math.
And so one thing you got to be careful, if you think about the long tail risk, a lot of people will use the leverage today of that debt. And where will they put that leverage? Because the entire system is designed to capture that leverage into what? Real estate prices.
Yeah.
And so they'll lever up, lever up, lever up. They won't put anything into Bitcoin. They'll go, essentially, they're concentrating their risk in real estate and more and more and more into real estate. And the long tail risk of that is when you have revolution and social that real estate will be taken back, one form or another. And so if you're all levered to that system, thinking you're getting wealthier and you're getting wealthier just because the real estate's going up, you need to get out of that one-way trade, or get somewhat out of that one-way trade.
Agreed.
And put some in real insurance policy.
How do you see? So I spend a lot of time. I built this new concept called the Bitcoin wealth pyramid, which shows you the relative ownership by all the different percentiles, is equivalent to the wealth period for, kind of call it, the fiat world. How do you guys see that transferring over? Do you think it'll be as bad as the old world moving to the new world, or do you think it'll be more of an equitable system?
Do you want me to take that, Greg, first?
Go ahead. Yeah, Jeff, go first, please.
So if it transfers and you build a credit-based system on top of that, and the credit-based system looked exactly the same as it does today, then it'll concentrate all wealth, because no one would ever sell their Bitcoin or trade in Bitcoin. It would never happen. I suspect that is an illusion, because we think the credit-based system is what requires productivity to work, and that's how we look at the world today. I suspect it won't look anything like that. And because of the counterparty risk, so right now there's a whole bunch of people that are lending out their Bitcoin, and I think a bunch of those people, it actually is also depressing the price of Bitcoin, because you can create a whole bunch of contracts on top of that. And what that means is there's probably a whole bunch of counterparty risk within Bitcoin itself underneath, because people are doing this, and you don't know, have they matched one for one on your Bitcoin?
Yeah.
But you would allow that to happen. When an event comes, that's actually why I say hold it yourself on a hard wallet, because it will rise in price. Like some of these counterparties will get wiped out in that process too, even on Bitcoin itself. Beyond that, if you think about what the system will look like, and I think about this from how do I gain wealth, right? Under a system aligned with incentives in Bitcoin, how I gain wealth is I provide value to somebody else. I cannot gain wealth otherwise, because the free market is working and I'm delivering value. Otherwise, I don't gain more Bitcoin. If I control a system through hiring a whole bunch of people, even an army, I hire a whole bunch of people because I have more wealth. What it means is I'm distributing my Bitcoin and losing my power as I do that. And that's what I think the system is going to look like. And that's so people are measuring the system today through the eyes of the old system, and how that early transfer and some of the early people will get famously wealthy. But to be able to control that, because Bitcoin you don't control the system through wealth. There's no control of the system. It doesn't matter how much you have. So you're actually distributing your power unless you're providing value. Unlike the system today.
Yeah, you guys, like, when people listen to both of you, and I have for a long time, you have a very sobering outlook on the future of the world, with kind of Bitcoin as a last ditch hope. But is there another hope? Like, for example, I get very upset when I see people investing their life savings in silly altcoins, tokens, meme coins, and I know they are being manipulated out of their money, but they won't listen because of tribalism or whatever else. But what do you guys say to that? You think Bitcoin is it's the last hope society kind of has, or it's not really a doomsday scenario, but you guys are preparing for something similar to that. But what would you say to that? And do you think people should risk their money on altcoins?
Like everything. Go ahead, Jeff. Go.
So, and again, I think in first principles, and I've done a lot of work here. And what I realize in human nature if a system can be gamed, human nature says it will be, for sure. Gold, by centralizing, meant you could game it and you could change the rules. And throughout history, it was the best way to hold us accountable, but it was always subject to rule change, because if a system can be gamed by humans for personal benefit or benefit of their group of people or benefit of a nation, it will be gamed. Then I look at the entire thing of Bitcoin, and I look at Bitcoin and I say, it's a system that can't be gamed, or the lowest probability system that can be gamed. If you built a credit-based and the massive credit-based instrument on top of it, and you said, I'm going to concentrate power in all those people, and they're the only ones that can buy mining equipment because they have so much power, then it'll centralize and it could be gamed. But today, and what's happening in the Bitcoin network, is it's the most probable system that cannot be gamed by humans. And we need a system like that to be able to move to the other side, because we won't make that choice ourselves. So it provides game theory into a system. A whole bunch of people could get wealthy in doing it, but it's that countervailing force of them getting wealthy and fixing a system that is actually paving the way for the world. Now I look at all of the other altcoins underneath that, and you'd have to ask yourself, why wouldn't they do Bitcoin? Like, first, okay, why did they create this other system? And if you have a foundation, if you don't have a hard fork, the system can be gamed by humans. All of those. Or even if there was something that was new, that was not this thing, what are the chances of that little coin emerging to a spot where Bitcoin is before it could get gamed? And I see low probability events in all of them. So now, if you're saying, am I a trader? Can I make some money because I have more information than somebody else and I'm not an insider? The insiders will make money for sure. But they're making money normally at your loss, and somebody's going to get crushed in that. And so it's not that maybe there's something I don't see today. But under those two things, I can't see anything that is past that bar that wouldn't be gamed.
And so Jeff is, I'm going to interpret it as being the difference between truly decentralized versus partially centralized in terms of other digital assets. And due to its adoption, its network effect, Bitcoin is the only digital asset that I see that can solve the fiat Ponzi. And that's our biggest challenge right now, is solving the fiat Ponzi. Is there going to be a place for other digital assets in this world? In my belief, yes. But there will be no place for it if we don't solve the fiat Ponzi. De facto, you have to start with Bitcoin. Then you start with layer 2 and layer 3 solutions on Bitcoin, and you'll see why potentially other blockchains are being used as a test net for layer 3 Bitcoin. But I don't even want to go there. Is there a role to play for other digital assets in this world? In my opinion, yes. But none of them solve the fiat Ponzi. And if we don't solve the fiat Ponzi, we know how this ends. Mass revolution. And we don't want to live in that world.
Excellent. So when I look at the drainage, as I call it, from the exchanges, we are losing 100,000 Bitcoin a month at this rate. And some people say, and there's anywhere from 2 million to 1.3 million on exchanges left. At that rate, all the Bitcoin could dry up within 13 to 20 months. And I do know a time will come where the supply will dry up and price will go parabolic. The question I have for you guys is, pick a year when this is going to happen.
Okay, yes, I will pick a year, but I won't share it, okay? Here's the funny thing. I will pick a target, but I won't give you a time frame. I know Bitcoin goes higher. That is my solution, but I won't tell you when it hits my target price. It's not there yet, and therefore it is cheap. But never give a time and a target. You'll be made to look like a fool, okay? So is it going to go parabolic? Yes. What year? I know what year. I'm just not sharing it.
You know, people on your doorstep soon.
I love that. No, I can't answer. Otherwise, I'd look like a fool.
But you both see it happening as we go forward.
No question. It's math. It's math. It's
Can I
math.
just add something? I'll add something to what Greg said about the other coins and everything else and what confuses people on the other coins. Composability in an open source technology means anybody can build onto something. You can take a piece of code, and that piece of code can be used. So you can take something out of GitHub and you can combine it with your idea, and it built a building block of a whole bunch of different things, and it moves really fast. And as more and more people are using that, it looks like it's creating a whole, or not looks like, it can create a whole bunch of value. If that value is making the network weaker, that's on top of that, let's say Ethereum, and it has to concentrate control, then all of the things underneath it are at risk. And then if it increases gas fees, and then somebody creates a new coin that's cheaper, and then there's composability off of that, and then a whole bunch of experiments on top of that system. And that's actually why you have to come back to the base layer. But in Bitcoin, I understand that composability or smart contracts, which would open up that ability, didn't exist on Bitcoin. So a lot of people look at Bitcoin and they think, oh, that's old tech. It just does this. It's just this asset. And over here has all of this dynamic movement and a whole bunch of people. What will happen now out of Taproot, it's so early, is that technology is going to reinforce, and that a bunch of the entrepreneurs are going to realize this base layer and what this means, and they're going to be building on top of that. It's super early, but a bunch of those ideas will move, is what I'm getting at.
Excellent.
I agree with that, and so does Elise Killian from Stillmark Capital. She expanded on that beautifully. These are our opinions, but I like to align myself with deep thinkers that see the future that way. You got to solve the first problem, and then we'll solve the other problems in due course.
So let's talk risk on, risk off real quick. I believe there will come a time when Bitcoin will be that risk off asset, a safe harbor to go to. You mentioned at the beginning of this conversation, Greg, that fiat, US dollar, is that risk off asset. When people are concerned, they move to cash. Another question regarding a point in time in the future: do you believe Bitcoin will be that risk off asset, and how far?
I do,
out?
and I wrote, I do believe that. I wrote an article that was published in the in Bitcoin Magazine. It talks about the gamma squeeze on the Fed put. Okay, it's when the Fed is no longer seen as capable of controlling the system anymore, and people need that other insurance policy. So the answer is yes, it is in the future. I don't know when, but I know mathematical certainty indicates you better be accumulating it for that day when it happens, because you don't want to try and buy it the day that it happens, because that's the day the parabolic price increase. It might increase literally by hundreds of thousands of dollars in an hour.
Yeah.
Why? Because the switch finally clicks, and it becomes that long volatility asset that everybody needs as insurance against all their other short volatility exposure.
It's funny. I think I was the first one to spot the gamma squeeze on Tesla a couple months or so ago.
Okay.
But I don't know how to spot the gamma squeeze on the US dollar.
I'm going to explain to you why. And then Jeff wanted to say something, but here it is. Because other central banks who know that they were counting on the Fed to bail them out, right, ultimately realize that insurance is not insurance, and they have to find another insurance product. Therefore, they are short delta on Bitcoin, which means they have to run and cover their delta short, and they accelerate this purchasing of Bitcoin, and it becomes just get me in, not get me out. Yep. It becomes get me in, which is essentially the gamma squeeze.
Beautiful. So, Greg, did he just?
No, you're there.
Here. Yeah,
yep, we hear you.
Right. So that's exactly what I'm actually talking about. Why don't have it on an exchange? Have it in a hard wallet.
Correct.
Because when that happens, you will find a bunch of the counterparties, even inside the Bitcoin ecosystem, when people say, I need to know it's mine right now, you'll find they don't have it. You'll find if you've
Correct.
you lent out your Bitcoin, somebody's going to be offside on that trade as it squeezes, and it'll squeeze faster and faster as a result of that. So
Correct.
make sure you have it in a hard wallet on yourself.
I do not lend out my Bitcoin. I am not comfortable with it. I do not lend out insurance products or otherwise collateralize my fire insurance when the fire is at my back porch and I am not prepared to somehow compromise that insurance policy.
Awesome. Two final questions and a fun question. Thank you so much for the time. Sorry for running so long, but we have so much to unpack. So, in recent interviews, you both spoke about Bitcoin possibly be the only solution to climate change. Can you explain quickly? Because I know, Greg, you're involved with some mining stuff, and Jeff, you see the world very differently.
So Bitcoin, I'll take that, Jeff, and then Jeff will add to it. But here's the very simple solution. Look, there is the amount of energy that's wasted amongst all our energy use in the world is astronomical. When I say wasted, either we're producing it for baseload electricity consumption and people aren't consuming the base load. It's not like you change your base load of your system. You produce the electricity, and if people aren't running enough hair dryers and air conditioners, that electricity gets wasted, okay? Bitcoin can solve that. It can actually green up energy resources like flare gas that otherwise would be vented into the atmosphere or burned into the atmosphere. You can conserve that energy or capture that energy and mine Bitcoin. It sounds sexy and it's not a solution for everyday life, but in the Middle East where there's huge flare gas supply, those Middle Eastern countries would be really wise to start mining Bitcoin. And by the way, that does clean the environment. Most importantly, though, it operates by the laws of conservation of energy. You can use energy sources that are not near centralized population cities. All these energy sources of energy that are in remote areas can now become utilized to mine Bitcoin and secure the network. And by the way, it would otherwise be going and wasted into the environment. So I'm a strong believer that Bitcoin actually is a positive for climate change in the context of using wasted energy resources that otherwise would be venting naturally into the atmosphere.
Great. Yeah, and so I'm from a systems perspective. Then, if technology is reducing prices, and I'll give you an example of one of the boards I'm on. Company's called Cubic Farms, chairman of the board of this. It's early still, but I can tell you this company has already solved through containerized undulating path energy in growing food to a point where it's lower cost to produce lettuce locally than it is to truck lettuce from California. So, and not just lettuce, a whole bunch of other things, but let's just use lettuce as an example. So now you should see what comes out of this automated system. It's incredible. Lasts for a lot longer because it's not transported and the works, and it can be localized anywhere. So this system is now reached a tipping point where it's lower cost than all alternatives right now. And what that means, just like everything in technology, you're embedding a different way of growing into something that gives us abundance, way lower cost for more. What happens in the market when you break the price threshold? Everybody races to it. And so that's what's happening. People are racing to this because you can localize. Now you don't have food insecurity. You can localize anywhere, and you can bring this lower cost, abundance, commercial scale anywhere, and it accelerates. And now you put robotics on the end of it, and it removes more labor, and it gets cheaper and cheaper. And the other system tied to, and by the way, that whole thing, you'd think that's pretty good for the environment, right? It uses less water, uses less, it gives us abundance. We don't have to transport food from way away and all the labor, everything else. And it's really positive thing for humanity. but it hit the price threshold where it broke the existing market. What is it? What has to happen is that ends up happening. And let's just look at that as one tiny thing. Good for the environment, but the price threshold is what created the change in people's buying patterns. Now it gets lower and lower cost. So you add more deflationary pressure to the market through that, which is good for the climate. What must the system do to offset that? It must, because now you've taken another industry, big industry, agriculture, and you've moved it to automation. What the system, and less jobs, what the system must do is print more money, make prices go up against that. And you have another, now it's not just photography. Now it's not just music. Now it's not just this. Now it's food. And you have another industry that's outside of that GDP measure that's trying to go up all the time. And I have to make prices go up against that. So I need to distort monetary policy more. And I need to make prices rise, at which point that track farming needs to more fertilizer, more everything. I have to make my land more efficient against this change. I need to bring in labor from Mexico to be able to pick this stuff because I can't pay my labor high enough here, and prices go up, and it causes a greater change. And automation moves faster and consolidates more power in very few companies as a result of that automation. The natural force is the automation, the productivity. The unnatural force is inflation. The inflation is climate change. You cannot solve climate change if you believe in climate change from a policy that must grow forever on a finite planet, because it obfuscates what's happening underneath, and we all choose to get more for less, and the market chooses to get more for less. So by printing to offset that, you essentially, I suspect, if you did, now it's hard to, and I know this is a really polarizing issue, but I suspect if you looked at carbon in the air and tied it to the exponential printing rate, you'd see the same thing. I suspect if you could, would pull that apart. Yet you have a whole belief pattern that you should get governments to print more money to solve climate change.
Another mind bender.
That's incredible. Well, and here's the neat thing. Look, the U.S. military uses over a million barrels of oil a day, right, to defend the petrodollar. Let's just full stop. Okay, you're defending the petrodollar with 1 million barrels of oil a day in the U.S. military. What if that's not needed? Well, that's good for the environment. I won't go any further.
Awesome. Final question before the final fun question. What else can we do to speed adoption to the masses? I know you guys dedicate your lives, and I do, to try and spread the word. But what else do you think we could do or should be done beyond what's already being done by both of you?
Well, Jeff is a huge educator. Oh, go ahead, Jeff.
Yeah, I just think there's so many great people in this, and I count you as one, James. Like when I looked at the how fast your channel has grown, that's grown through your integrity. That's what you engage in the community, and it's grown because of your integrity. And the people, like I like to think about this community for me as I have gotten way more than I've given, because I've got to meet people like you, like Greg. Greg's turned into a really good friend of mine through this, but not just Greg, Preston, a whole bunch of other people. And this is an emergent network. It doesn't need me. But it's an emergent network that the more and more great people that join it and understand it and care about where we're going as society, talk about it. It doesn't have a marketing team, I don't get paid for this. This isn't something that I'm trying to create a business out of. It's something I care a lot about for my kids. And when I meet other people who care about this same thing, it's hard not to get excited and bond. And so I think it's going to happen no matter what. Yeah. But it's happening as a result of all of us pushing that forward or talking about it.
Yeah, I concur. I mean, this community is on a daily basis. I meet new guys that have come into this, new people that have come into this community, men and women who have, extremely brilliant careers in other on other platforms. Specifically, a couple of weeks ago, I met the former chief technology officer of Gateway Computer. Do you guys remember the cows? You remember the? Anyway, he's now a Bitcoiner. He went into Ethereum and then said, "Okay, I see the light." Now he's full on Bitcoiner, doing Bitcoin mining, using old textile mills, using the abandoned waterfalls in old textile mills, which used to run before electricity. You remember the belts and the weavers and everything? Run by that waterfall still exists, and guess what? He's mining Bitcoin using that wasted energy. Wow. And he's taking those abandoned textile mills and he's turning them into a property use that is revitalizing certain areas. We talk about, something I'm involved in. We're bringing hundreds of high-tech jobs to remote communities in Northern Ontario because that's where our power plants are. This is good stuff. But what can I do? I can help and continue with the education process, much like both you and Jeff are doing. Jeff's book is phenomenal. I'll say it again. Best book I've ever read. I know, look, I'm not blowing smoke, and Jeff is a good friend. It is the best book I've ever read. And why is it the best book? Because there's only about 5 pages on Bitcoin. And that's good because you need to understand how you get to his thought process and what he's experienced in life and the ups and downs. So the education is key for me, and I'm part of a group now of being led by a trauma surgeon from Madison, Wisconsin, where we are working to put together an education platform at various levels of understanding. So you mentioned, James, maybe your listeners only get 10% of what I'm talking about. That's fine. We'll have a very layman or very unsophisticated or not unsophisticated, undetailed argument at the bottom, and then you'll move into a higher level of understanding. This is all going to be for free for the world to understand, being led by a trauma surgeon from Madison, Wisconsin, but we are using a Aussie who lives in Whistler, British Columbia is one of my Whistler, British Columbia is one of my partners. Another Aussie who lives in Queensland, Daz Bea. We are using another hedge fund manager, myself, as well as a German who now lives in Croatia. This is a community we have never personally met, except I met my buddy from Whistler. But the point being this. We're able to do this because of the technological innovation called Zoom and the platform. But we want to create this education platform. And here is my litmus test as to why it is leaking into the system slowly but surely. 10 years ago, I can promise you, most people had no idea what the term fiat currency meant. Now you can't turn anything on, with the exception of mainstream media, which doesn't want you to know what the fallacy of fiat is. Everybody else is worried about this fiat Ponzi because in their heart, they understand there is something implicitly wrong with the government putting money in your bank account, and you're supposed to feel that there are no repercussions from this, right, James? I mean, anybody who's worked hard and expended time and energy to create income understands why there's something implicitly wrong with the government printing money and placing it in your bank account.
It's funny. In January, I was screaming for the rooftops, inflation is going to be 15% this year. No ifs, ands, or buts, because I have a model that you take the money printing and you can see it trickle down. So the 40% increase in supply from C19. And now TV, everybody, you got Fox News talking about inflation every single day, and they only started 2 weeks ago after they spoke to Michael Saylor.
Well, they talk about it as what reported inflation is 6.8%. If you use the same formula that was initially used in 1980 when the Consumer Price Index was designed, it's actually over 15%. Matches perfectly to your M2 money supply correlation. Yes,
they're going to build a new one too. Yeah, they're working on a new model for CPI.
Of course they are. Why? Because the old one is already showing too many 6.8% when you get 1.5% on 10 years U.S. Treasuries. People are starting to think, how does this work? I'm guaranteed to lose, money on a real basis.
Sorry, Jeff. You said, how do you touch more people? How does this look? I I call it the party analogy. And in a party, if you're talking to, let's imagine you have a brain imaging on yourself. If you're talking in a room at a party at somebody, you'll be picking up their conversation. You might not do, you might disagree with them, but you'll be picking up their conversation, and it'll create in your brain a P3 wave, and you can only concentrate on one person at a time. In other words, every other thing collapsed for you into that party until that thing. If somebody else in that room says James, even quietly across the room, you tune out of that conversation, try to tune into the other one. And every other event collapses. So if you think about quantum world, kind of the observer creates the effect. And so we're all observers in our own world. We create our own reality. And in that room, there might be 1,000 open doors that change my life forever, but I don't see most of them. I see the one I'm paying attention to. And most of the other doors remain closed for me, and I have no idea they're open. And we think it's the rest of the world, but it's actually us choosing our reality. What's happening and you can see this on a brain imaging, that all the other conversations are actually picking up in your brain, but they're not creating that P3 wave, that cascading event of you understanding what the open door. Now take this, what's happening in Bitcoin. I think that's all that's happening. The people that see this have understood, and they can't believe that a whole bunch of other people can't see it. But they're in a room listening to other conversations. They're in a room and listening to other conversations, and they're blind to it. And if this P3 wave, which I believe is a highly probable event, if I could think about this, because we all live in our own reality, and at a different level, every single thing we live in is an idea. We live in a shared reality. If this thing cascades across more people, we'll live in the world that will look like that, and we'll have no idea. And from this world, we would have never seen it coming. And that's what's happening to society through this. That's what's happening to society through your conversations, these conversations. More people are opening the door. And once they look through the door, they realize, I might need to know more. And how do you get them to open the door? A lot of times, just get off zero. Put $10 in a hard wallet. By the time you've done that, you'll realize that there's a lot more here.
Awesome. So fun question. Thank you, guys. And then it'll be a wrap. We've gone on so long. But so first of all, you're both Canadian. You're both super nice guys. And you're also thought leaders in the Bitcoin space. Why is that? What is with Canada right now? So Canada always ranks the top 10 for economic freedom, and the US is way down at number 20. But for the longest time, Canadian entrepreneurs flocked to the United States. Is that turning, and why are you guys so knowledgeable about Bitcoin and crypto versus your average person in other countries all around the world? What is with Canada, and what's changing on the ground there?
I'll play probabilities. I think it's just it's a random variable. I wouldn't say there's anything particular about our country. Jeff and I'm very blessed to have met Jeff, and the fact that he lived in Vancouver versus Seattle, that's a 100-mile difference in community, and I think it's random largely. James, what I will say though is what we both share with the United States is a love of country. Love of our kids, the freedom that both of our countries have given us. Don't allow me anyway to take things for granted. Okay, my granddad fought in World War I and World War II. He was actually awarded the Order of the British Empire. It's quite a prestigious medal of honor for bravery. I'll promise you that my granddad didn't do that just because he wanted politicians to ruin our future for his great grandkids. And so I take a degree of responsibility for people past, present, and future that we're rowing in the same direction. We want this for good. We want this for people that are less privileged than us. There are billions of people on planet Earth that are unbanked, less privileged than people that live in G7 countries like we do. What do I know about Jeff that I also know about you, that I also know about Jason Lowry? He's this younger man from the U.S. Space Force that is absolutely off the charts brilliant. What do I know? Preston Pish, we all share a desire to give back, to make the world a better place. We are not takers per se. Yeah, we will take what's due to us, but we are also givers. So there's no border for that between Canada and the US. Giving is something that you are, is born into you. I was blessed to go to school in the US. I've lived there. I think I might have mentioned this to you. My roommate in university was killed in 9/11. I don't take that lightly. And it doesn't make me Canadian over American. It makes me someone who wants to avoid those types of tragedies in the world at whatever cost. And there will be people in this fiat system that suffer because people didn't speak out. And I'm not scared of speaking out anymore. When I first got into this market in 1998, I did know the Royal Bank of Canada was insolvent. But I was 25 years old. I had a ton of school debt. Do you think I was going to run to the newspaper and ring a bell that ensured that I'd never have a financial career in my life by saying the Royal Bank, Canada's largest financial institution, is insolvent? No. But after 30 years and putting away some money here and there and realizing that truth is truth, and people will reward you for telling the truth, even if they don't want to hear that truth. So Bitcoin is truth. That is pure and simple. What Bitcoin is truth. And I want to be part of that community, regardless of whether we are American, Canadian. I still want to beat you guys in hockey. Okay, that will never change. But I want to be on your team as far as Bitcoin goes. So over to you, Jeff. I love the people in all different nations. I've met so many cool people in various nations that reach out to me and they just say thank you, but they also say, hey, I'm seeing this and at least you are speaking it, because they are still in jobs where they can't say it. So I get DMs all the time. I am a banker. I work at a very large multinational bank, and you are 100% correct, but I cannot say anything because I am being controlled by the system. Hey, I'm 58 years old. I have another 20 or so years left. I promise you, I am not going to tell the truth. That is my commitment. So what I tell is the truth, and sometimes that hurts people. But Steve Hanke, you're a liar. Charlie Munger, you're a liar. And I need to call you out for the conflicted old fools you are. You know you're lying, and that's disgraceful. So thank you.
Those nice Canadians.
Yeah. Gloves off.
But here's the maybe I'm totally with Greg. It does matter from Canada. What does matter from Canada is that I was privileged enough to live in relative safety, hard knocks in business, hard things in business. Nobody lives a simple life, but a whole bunch of things that informed me, and from a privileged standpoint, that I was able to build a really great life. The reflection of my life everywhere, friends, family, money, everywhere is just an incredible, I can't believe I get to do what I get to do. And from that position, I've also traveled the world everywhere. And when you see what it looks like somewhere else and what you thought it looked like from your privileged spot, and then you go there and you see what it looks like from their spot, and you realize that some of your privilege, the negative externality is what they're living through. It forces you to realize, maybe a different type of competition would be better. And I need to look at what that might look like, because the belief that I had before I did that, I'll give you one real example. I went to Indonesia, 97, backpacking around, and met this family, no shirts on their back, and young kids playing. I couldn't speak the language. I had a guitar strapped to my back. I started playing, and they invited me to their house. Their house, dirt floor, pot on a fire. I didn't speak the language. They didn't speak my language, but it changed me. And I was like, why am I so worried about money? These people are the happiest people that I've ever seen, and they don't have any clothes. They don't have any shirt. They would give me the shirt off their back if they had it, and they don't. And so it's not about money. It's about our time, and it's about our relationships. And mostly all over the world, the majority of people look exactly like that. We don't think they look like that because we live through a lens that says, oh, those people look like this, that country is this type of people, that country is this type of people, that, and because we want to believe we have more power over our ideas matter more than those. All over the world, it breaks down. And that changed me to think, okay, if I could have been that wrong with what this looked like, where else could I be wrong? And I always wanted to look with kind of open lens, objective truth on that. Bitcoin is a system. It doesn't matter where you are. It could care less. And we're moving into a world with technology where it won't matter where you are. And you can have the same access to an open network. You can have banking. You can have everything else. I can trade with somebody in India easier than I can through the existing system. Yep. El Salvador, easier than I can. And those people make up the world. And those people are primarily, if you have a system that is aligned for the an incentive structure kind of aligned around good incentives, then you'll see the best in people. If you have an incentive structure that is not aligned around the best in people, you'll see the worst in people.
Excellent.
And so I want to see the best in people. That's it.
Beautiful. Well, you guys, really appreciate the time. You're changing lives every day. Honored to be here with you both and call you friends, and lots of love for the holidays now. Time to get back to your family. I've taken enough of your time, but I know the audience really appreciate it. There was over 10,000 people have watched this already. It'll be 100,000 by this time tomorrow.
You're doing great work, James. And you're doing the work too, sir.
Yeah, Bitcoin's gone up $216 since you started talking, Greg.
A rounding error. Still a rounding error. Get off zero, right, Jeff? Get off zero. It's that simple, people. If you own 0 Bitcoin, you are taking immeasurable risk compared to if you have a proper portfolio allocation. Thank you. Happy holidays.
Happy holidays.
And go Canada, go USA, and go every single country in this world to make it a better place. Thanks again, everyone.
Thanks, team. Bye.
Thanks, guys.